All right, welcome back. Well, more on today's troubling inflation report. New numbers show inflation is above 4% for the first time in 3 years. So joining us now to break down these numbers is Professor Arthur Dong, a professor at Georgetown University's McDonough School of Business. Professor, thank you so much for taking the time to join us this afternoon.
Thanks for having me on, Megan.
And first, what do you see, Professor, as the main factors driving higher inflation right now?
Yes, the numbers that were released earlier today came in much hotter than were expected. Although from observant economists, these were exactly the numbers they had anticipated. But this comes as unwelcome news to the Trump administration, as inflation has hit a high peak in as much as over 3 years. And so the main sort of impact that this inflationary number is derived from is the Persian Gulf War. And so energy costs have factored in to an elevated level of inflation across the board. And as we know, transportation comprises is factored into most everything that we buy and experience. And so therefore, this comes as not so much as a surprise to economists, but it certainly doesn't come as a surprise to American consumers who've been saying for a while that they've been feeling the impact both at the pump and certainly at the store shelves.
The ripple effect from what's happening in the war in Iran. You know, we see that impact, Professor. And question here, if the war ends, how quickly will those numbers change and will things settle down a bit?
Well, certainly we'll see sort of a tapering in terms of the rate of increase in the price of energy and oil, as well as natural gas. We've started to see some signs of that since April, but it takes time to restore 10 million barrels a day that have been taken off the market. Now, those sea channels around the Strait of Hormuz are clogged with tankers that are ready to go to market, but it's going to take a while to unclog all that traffic, and the impact will take longer than I think expected.
Yeah, one of the other major pain points for Americans right now, and you just briefly mentioned it there, the grocery costs, store shelves. Professor, what needs to get better there? What's contributing to those high prices, which we've seen high for years now? You know, businesses, are they passing on costs to consumers? What needs to change there?
Yes, certainly all producers of goods are trying to pass on the increased transportation costs. But also, when you reflect on farmers, their input costs, such as fertilizer, seed, as well as the diesel that's required to sort of automate and tend to their fields, all those costs are up. And that's certainly going to be reflected in the end price that American consumers pay for their food. But incidentally, you also see a sort of a rise in terms, or at least a slowdown in the service economy as well, because as Americans, our paychecks are not stretching. In other words, the paychecks are not keeping up with the rate of inflation, and therefore American consumers have to make choices with regard to their monthly budget. Those things that were nice to have are now being put on hold. And you're even seeing this in the service economy, as the National Restaurant Association has reported that there seems to be an across-the-board slowdown in the restaurant and service industry and hospitality industry as well. So you're seeing sort of consequences of both the war, the impact of tariffs, and certainly other economic policies that are all having an impact on the American consumer, and I would say in a negative way.
And let's talk, Professor, interest rates. There's a new Fed chair. President Trump, we know, has been pushing for the cuts, but does rising inflation change the likelihood of that? And even could we see rates go up?
Yeah, absolutely. And the Wall Street is certainly signaling that sentiment today, as the markets and all the major averages are down, as they are anticipating a rate increase rather than a rate decrease in the months ahead, even though we're going to install a new Fed chair soon. His hands will be tied with regard to the most recent inflationary numbers, as well as the outlook in terms of the American economy and consumer sentiment. So for all those reasons, there's a greater sort of anticipation of increased rates rather than decreased rates.
Arthur Dong, Georgetown University professor. Sir, thank you so much for taking the time to join us and share your expertise.
My pleasure.
All right, take care.